When I talk to some of the CEOs of our clients in particularly West and Eastern Africa, and I ask them where will the growth come from, many of them tell me the same story. They say that over time, P&C margins have been eroded because of increased competition, and they're really looking to life insurance as the next growth for their business. And the numbers kind of confirm that. If you look at the life insurance penetration in some of those markets and you compare it to the non-life insurance penetration, you'd see that there's a massive gap. And what we see in some other markets in the developed world is that they should be at least equal. And in many instances, the life insurance penetration should be a bit higher. So the numbers really paint a picture. And you don't have to look far for some success stories. If you look just at the Southern African markets, some clients have really increased their revenue. And the source of that revenue has been in the life insurance market. So on the one hand, in Western and Eastern Africa, there's this massive opportunity. On the other hand, some other markets, perhaps a little bit more south, you see a lot of opportunity to leverage that developed life insurance industry. See, one of the first benefits of being a reinsurer is you get this bird's eye view across many different markets, and also in a particular market you can really see what makes certain companies successful and others maybe a little bit less so. So when clients are looking for strategic partners, having access to a reinsurer with this bit of a bird's eye view really adds a lot of value. So we add a little bit of street smartness in how they play, and we kind of give them a bit of a fresh perspective, a different market's perspective. How are things different in certain markets compared to others? So that is maybe the first area where we can really help. The second one, and this is one of the probably little known benefits of reinsurance, and that's that reinsurers can also give you good access to funding. In the first instance, because you can free up some trapped capital on your balance sheet. So you may have some business that requires a lot of capital that you can seed. There may be capital locked up in future profits that you can exchange for some funding from the reinsurer. So there's a lot of trapped capital sitting on balance sheets, and we work with clients to try and release some of that trapped capital. We also work with clients to look at the structure of their balance sheet and to try and see whether there is a way to use reinsurance to restructure some of the items on the balance sheet. And it may be that clients don't want alternative sources of funding, so they may not want to turn to the equity markets or the capital markets for funding. And then reinsurance can be a particularly powerful avenue of funding. One of the other things where reinsurance play a particularly strong role is when clients expand, and whether that is expanding lines of business or expand geographically, they may encounter some risks that they are not 100% comfortable with. And having a strong partner with a strong balance sheet who may be more amenable to some of those risks then really helps. So you have a partner that can play alongside you, who can take some of the risks that you're not 100% comfortable in taking. And then perhaps the last point is just access to a global set of expertise and a global team of people who can really help you to design solutions for particular markets. The same holds true for local companies, holds true for Eastern African, Western African. We even see some North African countries making some really smart Pan-African plays in Sub-Saharan Africa. In fact, we see European companies and even a US company looking for growth in Sub-Saharan Africa. The really important thing to remember is it's not about trying to get a slightly bigger portion of a very small slice of the pie. It really is about increasing the size of the pie. And throughout history, the most successful companies in the world have been the ones who managed to make this pie a bit bigger. And the only way to really do that is if you focus on the end consumer. So companies that add value to the end consumer are the ones that manages to make this pie just a little bit bigger. And what is also really important to remember is the role of the regulators. So when you have this explosion of activity in particular markets, it's important for a strong regulator to enable that markets are still orderly and that people still conduct themselves orderly and that the end consumer still benefits. So important for us to make sure that there are strong regulators and that we see eye to eye with those regulators. And we also help to work with them to achieve some of their goals in the market.